Hi everyone and welcome to today's More Report on Wednesday the 27th of January with me, Rich Perry, Market Analyst at Handtech Markets. European trading sessions got off to basically a flat start, sort of mixed around the open. What we have had was a sharp rally on Wall Street yesterday, and that also continued into the Asian session. But the oil price has come off the highs and is quite lower. It's about 2.5% on WTI, 1.5% on Brent crude. The big rally that we saw yesterday, massive intraday turnaround on oil, and I can actually show you. Hold on. The massive intraday turnaround we saw on oil yesterday came as there were rumours that potentially OPEC would get together with Russia and sort of engage in some sort of production sort of limits. As to exactly whether that's going to happen or not, it remains to be seen. It seems to be a very difficult thing that they will be able to achieve if they can do it. Also, the fact is, if the US isn't involved in that, well, would the US just then increase oil production to take up the slack? It's possible, perfectly possible. Um, but what we did see yesterday was a massive turnaround in sentiment, and that was sort of seen across equity markets and forex as well. I'll show you some of the forex charts, which are significantly changed around. For the FTSE 100, my chart today is an equity market that's also had a big impact as well. So I'll show you that in a bit. But what we have seen is sort of an improvement just from yesterday's low on the Treasury yields. Not too much though of an improvement. Slight uptick, not a massive amount, but certainly there has been an improvement in sentiment, but not too significant. But with the oil price lower today, ahead of the Federal Reserve, actually, the Federal Reserve is the main economic data point to watch out for today. Now, the Fed is not going to raise rates today, and the expectation is that the statement will be the big thing that we need to look out for. Any sort of signs of any dovish leanings from the Fed, any sort of taking into account the volatility in oil, the volatility in the financial markets generally. Basically, the reasons why the Fed held off from a rate hike in September. So if you see sort of signs of that, then that could lead to possibly further declining expectation of a rate hike in March. So that's the factor that we need to watch out for today. What else have we got? Well, we've got the new home sales at 3 o'clock that comes expected to come in around about 2% gain, actually back above 500,000, but 501,000 is the expectation there at around at 3 o'clock. And also you've got the weekly oil stocks, which are expected to again show an inventory build of around about 3.8 million barrels. So that would certainly not help the oil price if that were to be seen. The oil inventories are certainly a large significant volatility factor for oil in recent weeks. Now, the FTSE 100, what we have got is, sorry, wrong chart there, what the prospect of a base pattern, and it is not really obvious on this daily chart. I'll show you on the hourly chart in a minute, but certainly there is a slight improvement, you would argue, on this daily chart, although it is mainly driven by yesterday's candle, which arguably was a bull hammer, but the bull hammer not necessarily at the bottom of a downtrend, but still sort of turned around intraday sentiment. Certainly has left another low. 5768 was this big low. Now this is interesting, I find. 5768 was this August low. Now look how many times in the past few days, around that 5770 level, we have seen turning points. It was the low on the 15th, again around the low on the 18th, produced a low on the pretty much the 19th. You would argue that that was probably a Marabuzzi line, or I haven't done the calculation. That's pretty much a Marabuzzi line of the 20th. The 21st produced the high, and then the low on the 22nd, and again the low yesterday. So it's a big pivot level, isn't it, on this chart? And you can see that on the hourly chart pretty strongly. We can see here 5768. Look how many times we've seen turning points intraday in the last week or so. 5768. So that's a massive pivot level now, I think, near term. But the thing I'm focusing on here is this sort of head and shoulders reversal pattern. If you see a move above 5933, that would complete the pattern. 5933 being the reaction high from Monday. That would complete your head and shoulders reversal pattern. And if you zoom out here, you'd certainly say that there is this turnaround. You've seen already a sort of broken downtrend that we've been having in the last sort of few weeks. This sell-off phase is now turning into a possible base pattern. You see the momentum indicators becoming more positive. That hourly RSI pushed above 60, and again it's looking to move above 60. The hourly MACD lines, look at that, in positive configuration as well. So you are beginning to see this turnaround of above 5933 gives you an implied target. Implied target on the FTSE of around about 6190, which is if I get the crosshair there. So you sort of measure the depth of that pattern and project it higher from the neckline. Gives you 6190. 6011 is the first line of resistance. Look at that, sort of cap the highs in early January, didn't it? So 6011 is actually the first line of resistance beyond that neckline. So it certainly seems as though I think the outlook is starting to improve. Now, the hourly candle we've just had on FTSE is not all that positive, however. We're actually down 20 ticks on the day. And it's sort of being driven by the oil price. Still, negative oil price is negative for FTSE generally. So it would require, I think, the oil price to stabilise to a certain extent, or maybe even rally for this FTSE 100 to really take off as a recovery. But still, the technicals on the FTSE are improving. So this is certainly something that I'm going to be keeping my eye on in the coming days. So I wish you good luck in your trading today, and I will speak to you later. Thank you.